Good afternoon, everybody. Today is... what day of the week is it? I don't even know. Tuesday. The hardest part sometimes in my day is knowing what day of the week it is. Today is Tuesday, March 28th. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I added in very small positions in Roku, Pins, and Snap on today's little dip. I also did a little dip buying today in Meta, Microsoft, and Shopify, but I liquidated those positions into the close and made a couple bucks in them. Still a down small day for me today, though. Down a bit. Mainly because some of my other swings that I had open were just a little weak today. But my intraday stuff was actually all pretty good. As far as the market goes, it was kind of a boring day. Boring week so far, actually. Last 2 days in a row. SPYs here closing down 0.1%. We might have a little bit of an uptick in the market since we've closed, but at least as of the moment, we're down 0.1% for the S&P, 0.5% for the NASDAQ, which has also upticked a little bit since from where we closed, and flat, slightly green for the Russell. So once again here for the second day in a row, we've got a little bit of that rotation with IWM relative strength and QQQ relative weakness as this market continues to mean revert, albeit today's in a pretty small way. Q's flat, Q's down 0.5%, IWM flat, just a small amount of continued mean reversion. But we got an inside day for the IWM, which I actually think is constructive. So let's take a look at the daily charts here. Daily chart of the S&P is still difficult, boring, middle of nowhere, range bound, above support, below resistance, at equilibrium. Just not much of an advantage here for the SPYs, I think, in either direction. SPY above 400 is where things maybe get a little bit more exciting for bulls. SPY below 390, I think, is where things maybe get a little bit more exciting for bears. The big story still is the Qs versus the IWM. Still looking for further strength to come into this IWM. What we discussed is that, technically yesterday is an area where you can begin to look for a pivot high in this kind of bearish pattern, another lower high. I personally have still been consistently talking about a thesis I have for mean reversion where the IWM catches up a little bit. And today is an inside day, so not a lot of progress for either bulls or bears inherently with an inside day. I would characterize it as probably a little bit more bullish than bearish, because in theory bears should have been able to drive us back down and they didn't, so it's an inside day. But I don't want to overread this candle. I do like this rest day, though. I do like inside candles on these daily charts sometimes for the market occasionally, because it helps, even if it makes today's trading session boring, which today's trading session was boring, it helps give us a little bit of clarity going forward for how this inside day potentially breaks tomorrow, if we break higher or we break lower. But I would characterize it as roughly as generally bullish that we were able to have this inside day, and that the IWM was able to give us relative strength with that inside day. The Qs we discussed, the daily chart looks significantly, it just looks outright bullish still. Yesterday we could not break through 312.50 resistance, which is no surprise for us. Today in the morning meeting we discussed, the IWM could hold in or rally a little bit, and these Qs could continue to time or price correct. We could get a pullback in the Qs to, somewhere between 302 and 303, and that would still be, very healthy. This pivot low from March 20th is about 302. Our 21 EMA is working towards 303. So I think that area is a healthy spot for a technical pullback. Bulls don't want to lose 300, but they especially don't want to lose the March 16th Maribozu low, which is 297.20. If you lose 297.20, then the picture here for the NASDAQ is switching significantly. So again, the battle here that we're paying attention to is with this neutral SPY. We got this bullish QQQ. Can it rest while the IWM catches up, or will this bearish IWM eventually cause this bullish QQQ to fail? That's been the big question. I think you guys know what side of the camp I fall on. I definitely fall on the bullish side of that camp, but we want the technicals to confirm it. And today was a little bit of a nothing day that I would, again, characterize as generally bullish, with relative strength plus an inside day with the IWM, and a Qs that gave a technical pullback, but at the end of the day, they were able to kind of round it back up, and we're left with actually what almost looks like a continuation hammer for the Qs on very low volume. It was a very low volume day period, so I don't want to overread this candle, but I think that the market is broadly looking productive. And what I've been saying on the small time frame charts, which I think is important because it worked out for us the last couple of days here in a row, is that at these times when the QQQ is looking really bearish, like for example this kind of bear flag that it was building out after this 10:30 a.m. negative Maribozu breakdown candlestick, I don't like the idea of really pushing for downside continuation here, provided the IWM is holding in. If the Russell is holding in, then I don't think, the Qs can be weak. We can certainly get that mean reversion that we've been looking for, which inherently means IWM relative strength and QQQ relative weakness. I just don't think that you are going to get the really big downside follow through in the Qs, and instead, sometimes the downside extension on these smaller time frames for these NASDAQ related names and the QQQs themselves can actually be buying opportunities. A lot of times when these Qs are looking the worst, and the IWM is not confirming it, I think you go back to the big picture thought process that what does a consolidation look like? Inherently, when you have a consolidation, inherently when you have a range-bound market, when it looks the worst is actually when it's set to go higher, and when it looks the best is when it's set to go down. So I keep seeing, like for 2 days in a row, yesterday around the noon period of time when we got extended in the Qs to the downside, I was coming in and buying a lot of mega cap tech companies. And then today, around this 10 a.m. candle, which I'm still not sure if the full degree of this tail is real. I know it is real to at least some degree. We broke lows there and snapped back. I'm not sure if we really actually traded all the way down to 305.29 or not. I'm really not sure. But into this kind of heavier pullback, I was once again kind of looking at buying some of these big tech companies. And even when lows were breaking again with this negative Maribozu at 10:30, I was obviously concerned. It doesn't look good. This is a bad candle. But I wasn't overly concerned because, again, the IWM is looking okay. This candle puts the IWM in the penalty box as well, but you're still above the opening low. And very quickly, we had that inside 5 and up that worked to pretty much negate this candle. And we went, kind of back into more of this range-bound action. So the market continues to do what we need it to do, I think, with a little bit of further mean reversion here. Granted, the more time that the IWM stays down here, technically the more bearish it is from a pattern perspective. So it's got a lot more work to actually do. But one step at a time. I think an inside day today for the Russell is productive. So we'll see how that all plays out. From a trading perspective, again, relatively boring day. The market didn't give us too much to work with. We had a flat-ish open as we're continuing to let these more difficult areas of our daily charts play out. So, I talk about it all the time. I think that one of the most important parts of successful trading is knowing when to be aggressive and knowing when to be passive. Yesterday and today, unfortunately, we want every day to be a really exciting day where we want to be trading our heads off and having tons of opportunity to make tons of money. It just isn't that way. And recognizing, yesterday and today that we've got, difficult flattish opens in a market that's in a difficult prove yourself area as far as the daily charts go. It's just not conducive to being really aggressive. So I think if you kind of have that thought process and you're picking your spots a little bit intraday and you're not going max risk on your trades, that's been the best approach for the first 2 days of this week. And hopefully our market gets a little bit more exciting again. I think Pat said on the radio, like, When things are going crazy, we all want it to calm down, and then when things calm down too much, we all want the drama to come back in the market. And I get that. Personally, I like a medium degree of drama. Not so insane like a COVID crash or aspects of 2022, but not so boring like we had in 2019 either, or days like today that are just kind of a lower volume inside day for the market. So that's everything I think from a big picture perspective. On the small picture perspective, I didn't really end up trading too many of the names that were actually on my list this morning. I know we were looking at a couple of these earnings names like MKC. This I think just ended up gapping up too big from the level. WBA for 34, but by the time it got up to 34, I wasn't overly vibing on the trade. It was just a big move kind of into that 34 off this low, so I didn't really do anything there. Occidental was really nice, actually. This is probably the best one from our list if anybody got stock in it. We talked about Oxy long versus the 60 area. It got upgraded. It sounds like Warren Buffett bought even more stock. You had some support from the XLE today. You had some support from the USO today. So being involved in some of these names was pretty solid. So Oxy versus 60. If anybody was able to get stock, Chevron made it right up to that 160. Didn't really clear it, but that's been a spot that we've been paying attention to as well. And then there was a couple others. This PAGS we're looking at. I guess it didn't give any continuation. Paramount we were looking at. It just gapped up too big, and then they sold that gap. So I don't think there was anything to do. SoFi still paying attention to that 580 to 590 area, but it was just relatively weak and immediately out of play, so there was nothing to do there either. So like I said, relatively boring day. I was able to take advantage of some of the downside extension on some of these mega cap stocks in certain areas. Amazon actually gave a good relative strength trade kind of early on, but then that relative strength faded. I know some of you guys were long here. This ended up kind of being a disappointing one if you ask me, but the initial trade was okay. And then I was more looking at the dip buys here. Meta, I think I was able to get some stock at 198, which was a really good price. I liquidated that position into the close. Microsoft, I started very, very small, very, very small at 275 off the open. I got a little bit heavier, I think at 273. I think that was actually my better ad. Yes, I had some stock at 175. Had a little bit of an ad at 173. Sat in it kind of all day. 270 was really the spot that I wanted stock. It ended up closing okay. I just liquidated the position in the close. I didn't want to take the overnight risk. Seeing Mike Reed out of the corner of my eye. When you take the opening Microsoft trade, do you use a stop? Well, just keep in mind what I said my game plan was for the stock. I highlighted in the morning meeting today on some of these tech names that if we got bigger relative weakness from the Qs and the Qs worked their way down to like 303, that I would be interested in potentially bargain shopping some of these more mega cap stocks based on bigger levels that I'm looking at where I'd really like stock. So I mentioned specifically Microsoft 270. I mentioned Meta, I think like 192 to 194 would be my ideal spot. And then what I specifically said in the morning meeting was, don't be surprised if you see me buy little feelers. And again, these positions were very, very small. At Meta 200 and Microsoft 275 to have a little bit of stock kind of on my watch list, just have a little bit of a feeler position where I can then build into and eventually probably get heaviest into like the 270 area again for Microsoft and that like 192 to 194 area for Meta. So do I have a hard stop in at Microsoft when I bought a super small feeler at 275 and I'm planning on having that into 270? No, I didn't put my stop in right away. Again, it's always really hard because I always want to balance when I'm working with everybody on the team here in the morning and afternoon meetings. I always want to balance what I think the right thing to do is versus what I actually do, because I don't always do in my own actions what I profess is the technical right thing to do from a trading perspective. Like if I'm speaking to a new trader, someone who's at more entry level, second you buy that stock, second you buy any stock, you need to know what your stop loss is, meaning where it is, and have it out. Because there's just been way too many occasions I've seen over the course of my career of new traders who are going through a learning phase who don't put stops in, don't get stopped out where they're supposed to, take much bigger losses than they should be. And the key to this business, especially when you're getting started, but always the key to this business, is your risk management. And for someone who's like a brand new trader, entry-level traders don't make money. I'm just going to say it as a blanket statement. It's not really a blanket statement. I have seen some entry-level traders over the course of the 10 years that I've been working with traders come in and make money right away. But it's so extremely rare. Show me someone who is brand new to the trading business, that's in their first 3 months of their career, that you don't make money your first 3 months in this business. It just kind of really doesn't happen. The key is when you're that new of a trader and you're working through the learning curve, and that's why you're not making money yet, because it's such a big learning curve. There's so much that you need to know. You don't even know how much you don't know when you're first getting started in this business. The most important thing is to focus on your learning and to make sure that you don't dig yourself into a hole that's too deep that you can't get out of. Because I've seen this happen also, where you get a trader, trader starts off pretty bad, because every trader starts off pretty bad. They take losses that are bigger than it should have been if they had good risk management. And just by the time they're hitting the point in their career where they're starting to see the light, they're starting to turn things around, they're starting to taste what it means to make money, they've dug themselves into a hole that's so deep that they can't get out of it. So again, I always want to be really honest on what the right thing is to do versus what I tell people, or versus what I do myself. Because everyone has to keep in mind what your account size is, what your trading experience level is, how much you can afford to risk. And most of the time I can afford to risk very significantly more than someone who is like a brand new entry-level trader. So again, I just want to get this across because it's really important. Did I buy Microsoft at about 275 today with no stop loss in place? We're planning on giving this thing at least $5 worth of room? The answer is yes. If you're a brand new trader in a small account, you should never do that. You should never do that. So again, that's the answer to your question. But I guess on that note, being a pretty boring day today, I don't have anything else on my side to really talk about. I should mention, tomorrow I'm doing the conversation with a trader again. Conversation with a professional trader on LinkedIn. That's going to be at 5 o'clock. I'm the first returning guest. I had Dan Darrow, Scott Redler, the great and handsome Patrick Haw, and then tomorrow I am going to be the one kind of returning. So tomorrow I want to make sure that we are done with our afternoon meeting by 4:45 at the latest. And I hope everyone signs up and tunes in for this Conversations with a Pro Trader, because it's been pretty cool. I need to harass Josh a little bit more. I need to harass Josh a little bit more. You should do it. Cool. So again, with that said, happy to answer any questions that you guys have. I'm actually not seeing anything in the VTF yet, but I'm seeing that there might be some stuff over here in the YouTube. Sebastian asked me if I would look to play the IWM Inside Day tomorrow. Yes and no at the same time. I don't know if I'll trade the IWM specifically tomorrow, but you can better believe that I will be watching it as a very important layer of probability, I think, for the market, for further rotation, the stocks that I'm in, and the stocks that I'm looking to get into. From Chi, does the futures market have an effect on technicals? SPYs have been selling off 4 days in a row into a support zone. The next day, the ES ticks new lows and trades back up through an important level before the market opens. But when the market opens, the price is above yesterday's close and trades higher. would that move have substantially affected liquidity on the market? So I'm just going to take this one step at a time here. Does the futures market have an effect on technicals? Absolutely, it does. So if you are part of the team here and you get to look at Pat's excellent morning note that he writes for our team every day, his research note, for the technical analysis portion of his note, and I actually love that he does this. He uses the futures. He doesn't use the SPY. He doesn't use the S&P. He uses the S&P futures product. And that's great because it gives you a little bit of a different technical picture than what you get from the SPYs, because it's including, you know, what happened overnight and what's happening up until that point. So yeah, it's really important, I think, to pay attention to the technicals. They just kind of flow into one another, though. So during market hours, the technicals intraday are going to be the exact same, pretty much. But it certainly has an effect on everything. I like using gap analysis, though. I love the fact that our market gaps. It really helps me with my trading. So that was the first part of your question. Interesting. It looks like we're having the opposite today, where the VTF looks clear, but the YouTube looks a little bit blurry. I'm not sure if you guys are seeing the same thing. But follow-up question from Chi. Would that move be considered an RDR or a DOO trade setup? Yeah, I would. It just would be with the futures market or the overnight market on the equity market. So yeah, so you just got to be careful with your liquidity. I guess I'm trying to understand how the futures market affects liquidity on the market, since it trades more hours in the market itself. Sure. So I mean, you're gonna so I don't trade futures. That'd be the first thing I would tell you. So I don't really have first-hand experience of trading, you know, the E-minis in the middle of the night. But my understanding is that you're gonna have more liquidity during actual equity market hours, even for the futures product, than if it's, you know, 3 o'clock in the morning. And that's just the nature of the people who are involved in it. So I think that you're asking about technicals, you're asking about liquidity. I don't think that they're necessarily one and the same or affect each other. And then your final follow-up question, does the futures market have an effect on the broader market? The futures market is the broader market. It's the same thing. It's just continuing to trade throughout the night. Or it's the individual names that have the effect on the broader market. I mean, so this is like a chicken and egg question. So I feel like the final part of your question is, like, do stocks move the market, or does the market move stocks? I think kind of the answer to that is both. It's a market of stocks, right? So, you know, we see it all the time, especially if you look at like Apple, because Apple is such a big market cap, as just kind of an example. You'll sometimes be doing your technical analysis on Apple, and you're like, ooh, Apple's showing relative strength, it's holding in better, and we'll talk about, like, if Apple breaks up, the entire market might improve. The opposite's true also. You know, if you're looking at the market looks like it's about to break down, but you're looking at an individual stock, any random stock that might be holding up, then, you know, that market is going to negatively impact that stock. So, you know, tomato, tomato. Hope it helps. From Cyril in the YouTube. First 6 months I was losing money. It's part of the learning process. Key is to keep it small at the beginning and slowly move to consistency. Yep, agree with you 100%. Awesome. Yep, and being part of a good team is definitely key. What's up, Damien? Back over here to the VTF to see if I missed anything over here. Passed Series 57 last Friday. Awesome, Michael. First day here this afternoon, going through the onboarding now. Awesome, awesome. Congrats, welcome to the team. As long as you got the W. Awesome, welcome, Ben. Alright, good stuff. Well, you sure tuned in for your first afternoon meeting on one of the more boring ones, where we don't really have as much to talk about. It was kind of a boring day today. But don't worry, there's going to be a lot in store for you. For many, as a newer trader, could you explain How you get into a full position. Sure. So the way that I get into a full position, if we want to call it that, it's dependent on the trade that I'm taking. The type of trade, that I'm getting involved in affects how I do it. So sometimes I take all my stock all at once. Sometimes I am doing things on a bigger picture where I've got a little bit of stock and giving a lot of room because I really want to keep an eye on it in order to get heavier. So, if I'm taking a momentum trade as an example, I'm buying a breakout. I'm trying to think of a good example from this week, but we haven't had too much to work with this week. I'm sure there were some last week. I don't know. It comes to mind because XPEP got brought up this morning. How did the LI and XPEP end up doing today? Man, this LI ended up being a great trade today. That's frustrating for me, kind of, because I had it the other day when it didn't work and didn't have it today when it did work. Though actually the one I was involved in was XPEP. But we said in the morning meeting that XPEP was gapping up too big to probably avoid it, and that LI through 24 could be a trade. But we looked at XPEP $10.10 as a potential momentum trade on the 23rd last week. That's an example. I took all my risk, all my size all at once, and I'm basically all at once. I might have split it up between taking the offer and going inside bid, but it basically took all my stock all at once. It's a momentum trade. It's a breakout. I want momentum to come in. I'm not trying to build into a momentum trade. If I'm buying 10-10 and looking for this breakout and looking for it to go, and I'm building in, I should never get filled up on bids. If I'm getting filled on bids in a momentum trade, it inherently means that the trade is failing. So that type of trade, you take all your stock all at once, you put your stop loss in, you know exactly how much you're risking, and you go for it. These are actually my preferred trades for entry-level traders, by the way. Is more of those momentum style, take all your size all at once, put your stop loss in, and let the trade play out. I think that those are generally better for newer traders. The stuff like I'm doing with Microsoft, buying at 275, being willing to give this $6 worth of room off of a feeler, and building into it, looking for signals to be able to get heavier, building out onto pops, and then really looking for a move more into, like, my ideal situation is I get some stock at 275 as a feeler. Maybe just go straight up. I get out eventually. I make some money. I buy 275. It pulls down to 273, kind of like today. I take a bigger ad at 273. I get a bounce to 275. I sell some of my 273 at 275. I reload that 273 back at 273. It works its way down to 270. At 270, which is a spot I'm really interested in, I get a intraday signal into the daily chart, and then I really take on significantly more size, and work the trade at that point, potentially with multiple stops. It's a much more complex trade, complex game plan. It requires you to have a big enough of account to be kind of nimble with what you're doing, because as opposed to like this XPEP trade where I'm buying 10-10, my stop loss is $10, I've got 2,000 shares, I'm risking $200. The exact dollar risk that I might be taking on this Microsoft is a little bit looser. I have an idea of what the number will look like in a worst case scenario, but I couldn't tell you like to the penny what it's going to be in this trade. And again, I think that this is the better setup for more of that entry level type trader. You know exactly what it is. Every 1,000 shares that you take, 10 cents worth of risk is $100. So I think that this is generally the better trade. Unfortunately, these types of trades haven't been great this year. It just kind of is what it is. Market environments are constantly changing and constantly adjusting. Certain points of time, certain types of trades work better than others. And I'm very sure that these types of breakouts will come back into favor again at a certain period of time. But yeah, Nick, really honestly, for like a year and a half, I mean, ever since the bear market, breakout trades have been a little bit more difficult. But there's been time, and it'll come back. It'll come back. I'm really confident that those trades will come back. I don't know when they'll come back, but they will come back. That's my preferred trade. And again, in that case, I'm taking all my size all at once. In the Microsoft, it's a little bit more open, you know, and that's the whole point of what a feeler, for me at least, is that I'm not, you know, I love this 270 area. That's a spot I really want to eye, but I don't know what the stock's going to look like when it's getting to 270 when it's at 275. I might disagree at that point. I might think that it needs a little more space, or, you know, I'm looking around 270, 271 for that small time frame setup to come in to get bigger. Maybe it doesn't come in till 267 or 268. I'm going to be fine with that, actually. I'll be a little annoyed and, you know, like, I'm like bleeding out a little bit more than I wanted to on that feeler, but it's going to be fine. But again, this isn't the type of trade that I think is ideal for a newer trader. I think that these more straightforward ones are, or even, you know, like those hammer capitulation setups that we've been looking at can be a better, you know, dip buying trade where you take all your size at once. So like, instead of having a feeler like me in this Microsoft, you know, you're not going to be able to do exactly what I'm doing, where if you bought at 275 and it goes to 278, you book a little bit of profit, you make a few bucks, you have a good weekend. Or if it goes down to 273, you're adding a 273, you're selling some at I mean, this is exactly what I did today. I bought some 275s, I bought some 273s, I sold some 273s at 274, 275, and then into the close, it was ticking back above 275. I was like, you know what? I bought this at 275. It's at 275 plus all the money that I made from the earlier purchases. I'm just going to liquidate my position. I don't need the overnight risk at this point. I'll reassess it tomorrow and just kind of put the money in my pocket. So you can't do that if you want to, and this is what I was getting to, which I also don't mind for a newer trader. You know, you could do it without the feeler, right? If you're looking for 270 and it's at 275, you don't take the feeler, you don't take the 273, you don't have the opportunity to make the few extra dollars that I made, but you know that 270 is really that spot, and as it gets down there, you're looking at it, you're looking for that signal, you're looking for that hammer capitulation bar or whatever it is, where once again, you can take more, you know, more specific size on what probably is the better trade that I'm actually looking for to begin with, and make decent money off of it. You're just not going to make money if the stock stays so strong that the setup that I really want never happens, if that makes sense. So I'm always really honest about it. I do think that this business is easier to make money in if you're working with more money than if you're working with less money. You know, having a larger account, it gives you more game planning flexibility. It gives you more space to be able to play with things. So I do think that this business is a little bit easier when you're bigger. But I started in the business as a $5,000 account. I started as a prop trader with T3 Trading Group in 2010, and I put $5,000 into my account, and everything started from that point. So I didn't start where I am today. You know, it took 13 years to get to the point where I can absorb a, you know, 6-figure loss in SIVB and still have a positive quarter, and a decent quarter at that. I'm actually having a pretty decent, you know, quarter that's rounding up here, despite that SIVB loss. But, you know, it took 13 years of building to get to that point. So, hope that helps. Is that a bull flag on Microsoft? I'm trying to get a handle on identifying patterns with real data, or specifically an ascending flag. So I've got some training program classes, Ben, that I would recommend that you go through. I think it's about 15 classes covering a variety of topics. If you're new to the team, I definitely recommend going through them. It includes chart patterns. So yeah, I would recommend checking that out. Technically, this is a bull flag on the daily chart of Microsoft. Yes, it is. Awesome. Yeah, so you have Microsoft that has been in an uptrend, had the flagpole come in here, and then your actual flag itself is building out. 270 support, roughly 280 resistance. Technically, if this breaks 280, you're looking for a doubling of the flagpole. So if we want to be conservative and say that started at 260 and went up to 280, you're looking at a move up to 300 on a break at 280. But you'll also learn pretty quickly that I don't love chart patterns. I like them, sure, they're important, you should know them. You know what, I'm going to take that back. I'm not going to say I don't love chart patterns, I just think they're overrated. I think that people who have never traded before, who think about technical analysis, they just think it's all about memorizing chart patterns. It's not. And I saw an interesting statistic recently that was, depending on the chart pattern that you're looking at, it has a 30 to 50% failure rate. Assume the higher part of that, 50% failure rate. What the hell is the benefit of learning chart patterns if they've got a 50% failure rate? It's because what we're seeking to do and what true technical analysis is not memorizing chart patterns. It's understanding what created those chart patterns from a supply and demand perspective, piling on top of that layers of probability that increase and decrease the probability of a chart pattern working or not working, and then piling on top of that a more fundamental understanding of both the market and the stock that you're looking at to further increase and decrease the probability of what you're looking at working and not working. And that's how all of a sudden you could take a pattern that works 50% of the time and potentially, you know, be very profitable off of it. But if you think that you're just going to come in and memorize, you know, what flag patterns look like or whatever and be uber profitable, unfortunately, it's going to be difficult. Do I ever reload, like in the Microsoft scenario, or just in my Microsoft trade today? Yes, I did. I bought 273, I sold 274 into this pop, I reloaded 273, I sold 274 again, I sold 275, and then I liquidated the position and it closed. So I got to keep that little cash flow difference, which is what I'm always trying to do with these types of trades. Yep. From Kyle, in your earlier years, did you ever withdraw money to pay yourself, or did you reinvest all of it back into the account? I did take out some paychecks, but I limited doing that as much as I physically possibly could. The goal was always to build scale. Even now, the goal is to build scale. To be honest with you, I'm trying to build scale. I'm trying to get bigger. I have my own personal goals that I won't discuss what the numbers are, of course, but they're still a bit bigger than where I am today, and I want to build towards them, you know, one step at a time. So yeah, I'm still, even now, you know, went on a fantastic run at some point this year, especially before the SIVB loss, and I didn't take out any of it. No, not in the beginning there. Actually, I took a big hit where I did put some more money in 2012, but it was just such a different market, though. I think it's much more common now to have to do that, Rich. But no, is the direct answer. I started, you know, as I said earlier, that I've seen very, very few traders start making money right away. I actually kind of started making small amounts of money right away. I think my first month ever live was flat, and my second month ever I got a paycheck off of it. It was small. I wish I had saved it. I wish I had. I don't remember what the number was. It was in the hundreds of dollars. And now I wish I just had the actual check. Keen, for what it's worth, I'm also entry level here. I'm finding as of the last 3 months that entering versus low of day is a strategy working best for me. Low of day being a clear out, or in certain times doing more of an RDR style and trading it back through the low, if that makes sense. Yeah, for sure. So this market environment has definitely been more about, you know, the dip buying than it has been about buying the breakouts. But you really need to make sure that you're doing it with a signal. So you're saying here that you're entering versus the low of the day. You're entering versus a low after it happened on the way up. You know, you're not certain it's a low of the day at that point, but you're buying it on the way up after low has been established, so you know what your risk is. And if you're doing that in the right spots and with the right, especially the right extension rules and things like that, it's been a pretty good strategy for this year that we've been able to take advantage of. Thanks, Rich. The acorn has become the oak. I love it. Love it. Over in the YouTube from Abdul, what kind of setup should entry levels look for in momentum trades? The most basic momentum trade setup that I like is the breakout. It's like I think it's one of the best trades to learn when you're first getting started. Unfortunately, again, this current environment hasn't been super great for breakout trades, but I feel like it's very simple to learn. It's a very effective trade, and I think it's a great starting point. And it's a momentum trade where you're buying high to sell higher. And again, specifically with daily level breakouts, we want daily level breakouts. I don't really care about 5-minute breakout. I want to find the daily resistance point and look for the breakout through it, because that's what's going to be where the more institutional money is going to be influenced. What influenced me to buy XPEV on that day? So again, it was the 23rd. I think you could probably go back into the YouTube and rewatch the afternoon meeting from the 23rd, where I probably was able to go over it in detail with the small time frame chart. But basically, stock was strong. The concern was it was a little bit extended. It had an inside day the day before. $10 was resistance on the daily chart. The day before, I put in a high of 10.10, which is an inside day. Inside bars, inside days, we use as an execution strategy when we like other things. What were the other things that I liked? I liked the fact that it was strong. I liked the fact that the inside day was above $10 resistance. And I liked the fact that I think it got upgraded that morning. Not 100% sure because it was a few days ago. I think it got upgraded that morning. I think there was like an extra news factor in there that had me paying attention to it for some reason. I don't exactly remember what it was. And that would be a pure momentum trade because it's already extended. That was the thing I didn't like about it that somebody brought up, might have been Rich in the morning meeting, on, hey, isn't it a little bit extended to take that trade through 10.10? And the answer was yes, but we compared it to other previous times of extension, and this name can squeeze in such a way where it could have worked its way up to $11 that day easily if it wanted to, and then that would have been a pretty good risk reward. Cyril saying shakeouts, that's why giving more space increases probability. Well, giving more space also reduces risk reward, but you need to have enough account size or risk smaller position size. Yeah, I mean, you can always get shaken out of stock, first of all. No matter how much space you're giving something, you can always find a way to get shaken out. You can always sell a low. I think that it's less about the space that you're giving it and more about the right stop loss. You can use these shallow stop losses sometimes where you don't know that your idea is wrong, and then you get shaken out. Like I talk about it all the time. Like I hate trading on a 5-minute chart for execution where my stop loss is above the 80 MA. It's a recipe for a shakeout. So you want to make sure that you're using a stop where you really know that the idea itself is wrong. And then you get stopped out, you know the idea is wrong, you move on with your life. You can't, regardless of your account size, you can't get heavy in a position without a stop loss. As soon as you're heavy, if you're heavy and you got no stop loss in, it's a recipe for real disaster. So. From Anthony, as a new trader, I find myself understanding chart patterns. Then when the bell hits, I let myself get rushed, lose patience, and too often jump in early, forgetting my layers of probability, afraid to miss out. So my biggest challenge, almost 3 months in, is psychology. But I'm working on it. At least my risk management is solid during the learning. That's awesome. Just need to work on psychology and reward management. But new guys coming in, just passing the 57, review their classes over and over, and listen to him and Pat and Josh and some of the senior guys who know who they are after a few months in the chat. Yep, appreciate the kind words. I get that feeling. I think that's why pre-market research is so important. You can kind of slow things down a little bit. You can kind of slow things down like mentally a little bit when you've got enough pre-market research done, where it's like, all right, this is triggering as per my game plan. I know what to do. Like I don't have to think as much about it. I'm just kind of executing. I remember what it was like to be a new trader. I remember how crazy the tape is, the tape moving, especially when things are getting crazy. You know, you have a real heavy sell-off, the volume increases, or a news event happens, like we've had with the Fed and CPI or whatever. It's like insane. I remember that feeling. It never happens to me anymore. Things can move extremely fast, and in my mind, it's still kind of slow, and I understand what I'm looking at. I liken that. I think I talk about this a little bit in my psychology class that I have in my training program classes. I liken that to the difference between an amateur fighter and a professional fighter, which is also something I remember. You know, as someone who had 40 fights and professional world title fights. If you ever watch an amateur fight, they're actually really entertaining sometimes. Amateur boxing fight, amateur kickboxing fight. Amateur MMA I actually find kind of boring because the people end up just falling over each other on the ground and they don't know what to do down there. But specifically amateur boxing and amateur kickboxing, you watch these people come out who have never been in a fight, their adrenaline rush just hits them, and you'll watch these fights that are 3 rounds, 2-minute rounds, and people just go white, and they like white eyes and just go crazy, and their arms are swinging and they forget to breathe, and they go absolutely nuts for about a minute and a half, and then the fighters will be so exhausted that they almost might as well just KO themselves because they can hardly continue to fight, and then it becomes like a little bit of like a war of attrition on who's got more heart at that point. But they just, you talk to a boxer or a kickboxer after their first amateur fight, there's a good chance they don't even remember anything that happened because it just went. And I almost feel like when you're a new trader and you're seeing like the tape and the charts move, especially on a big volume situation or a news event, it's the exact same thing. Like, what the heck is going on? This is insane. Everything's moving so fast. What do I do? You kind of go crazy. And then you look at a professional fighter who's done that, 30 times, and the first round is a feel-out round where the fighter is calm and they're analyzing the other person and they're comfortable with themselves. They're just kind of figuring out what's going on. It's a little bit more of a chess game. The trading for me is that way now, where it's just like, as insane as things can get, as crazy as my P&L swing, maybe becomes, I tend to stay very, very calm just through all of that because I'm just kind of analyzing the data, and it comes in slowly into my brain. Like, I don't know how to describe it. You guys probably all know what I'm talking about if you've ever even been in like a car accident or something like that, or in different situations of life, it almost feels like time speeds up or slows down. That's kind of what I'm trying to describe. They call it flow. I like it. Good stuff. Well, that's a big part of it, and then you also want to just make sure that you're doing your journaling after the market closes as well. And then, like I said, a lot of this is just about experience. You can do as much as you can to try to make it so that you are as effective as possible when the market opens. But, an amateur fighter is never a world champion fighter, right? It's just an experience level, any sport. What separates, Michael Jordan from, some 5th grader who's picking up a basketball for the first time? Just a lot of practice, and obviously some innate talent and being able to be, 6'6" or whatever Michael Jordan was. But generally the number one thing is just doing it, seeing it, doing it, seeing it. This is an experience game. It's like a sport. You just do it, you get the experience, and it builds up. Yeah, all about repetition. Exactly what Bill said. It's all about repetition, just like a sport. All right. Cool. Cool. So this turned into a good talk anyway, even though it was a slow day today. So 5 o'clock Eastern time, so we'll wrap things up. Hope everyone managed themselves well today. I'm down a small amount of P&L, mainly from my swings. My intraday stuff is good. I'm not I'm not bothered by it. The deep powder of trading, I love it. You know, it just is what it is, and tomorrow we'll go through our process that we have to go through in order to be consistently profitable. So have a great night, everybody.